Capital gains. Oh, let's try that again. Capital gains. So what is capital gains? So capital gains really is a tax that you pay on a profit of a specific property that you just sold recently. So why are we talking about capital gains? Well, the fact that it's 15% of the total profit. So if you profited in a sale, let's say $100,000, 15% of it is gonna go to taxes, which is $15,000 you're paying taxes, and good luck getting it back. Most of us bought homes in the military. We love our homes. We put our money, time, effort. Your wife is happy, your family is happy. There's a certain pride associated with owning a home. And then through time, you build it, you make home improvements to make the home better, right? Livable. Well, yeah, it's mostly for the wife. Wife loves nice homes. I mean, that's, I think, for everybody, right? Happy wife, happy life. Every few years in the military, we do have to PCS, called permanent change of station. So sometimes it's 2 years, sometimes it's 3 years. For majority, 3 years, and some people can stay in their stations for over 3 years, which is good. You're building equity. Going back to capital gains, there is an exclusion. Really, it's 2 years. So there's a lot of articles out here. Now, everything I'm going to talk about today, I will put the links in the description below. All these links that's going to be on the description are going to lead you directly to the IRS website. So this is not an article or my opinion. It's actually from the IRS. So you can fact check me. In fact, please fact check me, because it's very important. We're talking about large sum of money. Keep in mind 2 years, all right? To look at if you qualify for the exclusion, I'm going to put this in the screen up. This is really how you determine if you're eligible for the maximum exclusion limit. So for married filing jointly, you can really exclude $500,000, and if you're single, it's $250,000. And it also shows if you're widowed, then you also get another $500,000. And there's this description right here if you're eligible for the maximum exclusion. If just read it, take the time, pause the video if you have to. Now the question really is, and this is what this video is really all about, what if you do not qualify for that 2 years? Then do you have to pay 15%? For example, when I was stationed in Seattle, we bought a house, but I had to PCS less than 2 years. I think it was like 18 months. I had to move. I was thinking, okay, I have to sell the house. Then I have to pay capital gains. Now, when I had the realtors look at my house, they're just ready to sell it right off the bat. Like, let's go, let's make some profit. And then I asked the realtor, how about the capital gains? Is there any military exclusions or exemptions since I'm being ordered to leave or to move in a different state? This is very important, because if you're about to sell your house and you're less than 24 months, in my head, I was thinking maybe I'll hold off on selling the house. So what if you don't meet the 2 years? What if it's less than 2 years? Do you have to wait? No, not necessarily. There is what we call the partial exemption or partial exclusion. There are 4 instances that would qualify you for partial exclusion. Number 1 is work-related move. Number 2, health-related move. Number 3 is unforeseeable events. And number 4 is other facts and circumstances. Now, in this video, we're really going to worry about the first one, work-related move. What does that mean? Do I qualify for it? Work-related move, really basically, if you took a job or you were transferred to a new job, if that location is over 50 miles. So a PCS falls under this category, whether it's a full cost move or no cost move, as long as it's over 50 miles. Now, how do we calculate the amount that you're excluded? So I'm going to show this in the screen right now. So this is again from the IRS. So this is the calculation you're going to do to see how much you are exempt on capital gains. First one is you have to determine the shortest time of these following periods. Your time of residence in the home during the 5-year period leading up to the sale. Determine if you want to do months or days, okay? So let's just say your time of residence, where you live in the house in the last 5 years, let's say 18 months. Number 2 is your time of ownership of the home leading up to the sale. And the third one is the time that has elapsed between the sale of the date that you last sold a home for which you took exclusion. So remember, I told you can only do the exclusion once every 2 years. Let's just say this is your first time you bought a house. Step 2 is take the smallest period from step 1. You may use the months or days, like I said. So if you're going to use days, then you divide it by 730. And if you're using months, you divide it by 24 months. Step 3 is multiply the result from step 2 by $250,000. Now, if you're single, that's it. Now, if you're married, then you go to step 4. Step 4, you just repeat all those and then add the 2 together, or you just multiply step 3 times 2. So let's do the math real quick. So step 1, the lowest number we said it was 18 months. Step 2 is you have to divide it by, since we're using months, it's 24 months, which is basically 2 years. That's 0.75. Step 3, you multiply it by $250,000. That's $187,500. 187,500. Stop there if you're single. Now, if you're married, you multiply that by 2. That gives you $375,000. Now, this is the beautiful part. In my case, sold the house, got $100,000 profit on the house, which means initially I thought I have to pay 15%, which is $15,000. But this exclusion right here, they're partial, which means as long as my profit is less than $375,000, I don't have to pay capital gains. But my profit was $100,000, way below $375,000. So guess how much I paid in taxes for capital gains? 0. Just like that. Like I said, this video might not help you now, but it might help you in the future, or to help somebody that you know. Nobody's gonna teach you this. All this is directly from the IRS website. If you like this video, go ahead and hit the like button somewhere here in the screen. And if you don't like this video, also hit the unlike button right here. And if you do unlike the video, do me a favor and put in the comments so I can assess myself if I should be making more of these videos. If you have something to add in this video, put that in the comments as well. If you want to support the channel, go ahead and subscribe. My name is Bombo, and I'll catch you on the next video.